When I'm teaching real estate investors, school students, when I'm teaching them creative financing when they're buying a property, I always teach them that there's probably a minimum of 6 or 7 things that you want to bake into every deal you make. Now, there's 50 different terms that could be negotiated, but there's probably 5 or 6 or 7, depending on the property type, that I would want to put into the deal almost every time. So people will ask me, what number one thing would you make if you could only put one thing in the special terms when the individual selling the property is the bank and they're agreeing to something that the bank or mortgage company wouldn't agree to, which, by the way, they will do that. What one thing? Lights out, no question, not even a second, not even a close second. I would put a first right of refusal to buy my own note at a discount. Okay? Why? Because while they carried the financing for you and carried the terms over time, frequently people wake up, more frequently than not, people wake up and they decide that they want a lump sum of money down the road instead of the monthly cash flow coming into their mailbox. Now, I'm not telling you not to pay them well and as you promised. But just by life and circumstances, I know from dealing with literally hundreds of thousands of people that own a note, that they'll wake up one day down the road and they'll probably want to sell that note at a discount. And I want to structure that deal really tight where I can be the first right to buy the note and under conditions that they probably wouldn't give to anybody else. Why is that important? Well, let's just say that I originally owe them $100,000 and it's written at a low interest rate, 2%, over 20 years. So you tick along. Year 1, you pay them. Year 2, you pay them. Year 3, you pay them. And come along year 4, some life situation comes along, they want a lump sum of money. Now, remember that $100,000 loan has amortized down just a little bit. So for conversation purposes, let's just say that you now owe them $96,000. So you owe them $96,000. But what you did in the agreement is that you specifically wrote in there that if they ever decide to sell the note, that they give you the first option to buy the note. Now, they give you some certain time frames and certain protections where if they get a price from somebody else that you have a certain time frame to match that offer and so forth and so on. There's some very specific ways that it can be done to really put it in your favor. So they call you up and they have $96,000. You owe $96,000. And what would I pay for a $96,000? This is 4 years into it, right? So what would I pay for a $96,000 note at 2% interest with 16 years remaining? It's going to be bought at a heck of a big discount. That note might be worth 50 cents on the dollar. So now you owe them $96,000, but you write them a check for how much? For $48,000? Yeah. It's the deal after the deal. Right? Now, it's at their choice in their life situation. So I would say that if a note goes past 10 years, if the original debt that you owed them is past 10 years, the odds of buying your own note at a discount eventually will probably become 99%. Right? The shorter the term, the less likely. The longer the term, the more likely they'll sell the note at a discount. So, this is what I've learned. If the one thing that you bake into a terms agreement has got to be a first right of refusal for you to buy the note. We teach this a lot. We cover this stuff in classes. We talk really specifically about how it works. We give good examples. We have case studies of students that have bought their own notes for more than 50 cents on the dollar. It's a pretty cool story. And this is, after years and years in the business, just a pattern that we know exists. And so we're making people aware of it, because I always say, if you don't know what you're negotiating for, you're surely never going to get it. This is something worth negotiating for, and it's been a very powerful tool. Hope it's a powerful tip to you. Go make some money with it. See you later. Hey, for those of you guys that are still watching, hey, remember, like this. YouTube loves for you to like what I'm saying, and I love for you to like it too. And subscribe. Now, a lot of people ask us on a regular basis, what do I do? How do I progress? How do I learn more about what Eddie is talking about? Well, right here in the band, here's some information we'd love to share with you. We've got great articles, great stories, great training of all types that show you how to position yourself in the market and position yourself for the market ahead. We'd love to hear from you. Let's take action. Let's go kill this business that's going to be ahead of us, because the opportunity is going to be incredible. See you later.